Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, September the 22nd. And happy Wednesday, happy Fed Day. We had a Fed meeting today. And as you can see, if you're watching this, you know kind of what went on today. It was a kind of crazy day, crazy week, actually, especially since, we talked last week in last week's video, and kind of a lot's happened. So let's start here. I've got the ES up here. Let's start here and we'll look at that and kind of go out and look at the bigger picture and see what we've got. So right here was the Fed announcement, and we got a big. This is pretty typical, big pop, a big retracement back down to the original level, and then kind of gave that back. See our snow line right there? Came back to snow line, hit that, and then ripped again, and then sold that back off again. So this, leads to more questions than answers. And basically, what the Fed said, and we knew this was coming, is that they're going to taper, start to taper. Process and look at raising interest rates into next year, depending on the economic data that comes out and all that kind of stuff. So, we know that they have been buying $120 billion a month. It only costs $120 billion a month to keep things going, right? 80 billion, I believe 80 in treasuries and 40 in mortgage backs, and they'll start tapering that pretty soon. That's not good. A rise in interest rates is not good for the market. But yet we tried to rally on that, and I don't know if that's short covering or what. And that's again, that's kind of typical for what happens around a Fed meeting. I think the real test will be tomorrow on Thursday, when the financial media and whoever, the hedge funds and institutional guys kind of figure out which way they're going to position based on what was said today. And on top of that, we've got the Evergrand, that big Chinese development company that was actually caused a lot of this big downdraft. Let me back this thing out this week. You guys probably saw this. Evergrand announced, that's a huge real estate development company, announced they're in trouble and all that kind of stuff, may not meet their debt obligations, all that kind of stuff, and we really tanked, and that could send big ripples throughout all the financial markets and all that kind of stuff. And then we thought that was it, and then we ripped back up higher. Well, they have another payment, coupon payment, I believe, basically, I believe it's tomorrow, and if they don't make that, or they announce that they're going to delay that or something like that, that'll not be good, for the market. So, I probably sound pretty bearish here. And I'm not, but I am at the same time. Let me show you why. Let's go back here to a 20-day chart. Here's all-time high, 45.49 here. Again, we're on the S&P. 45.49 all the way down to our 1272 extension, and most of that, started here, and then a really valiant effort up here. To try to make a bounce, and then that failed, and then another one, and then today's kind of chopping action. So we've got a snow line there. Do we fail, take this out, and then go lower, or does this keep going? And I obviously I don't know. I am positioned right now for a higher move back up here, and I can say that, and I can do that. I've got a very super low cost diagonal. Basically, it's kind of like a broken wing butterfly, up there around 45.50 for a run. It's for next Friday. But the reason I'm doing that is I literally have $50 of risk on the downside. if we totally tank, not worried about it on the downside, right? It's a $5,000 trade as far as margin goes, but it really has no downside risk at all. So I wouldn't even say it was a lotto ticket. I think there's a pretty good chance that we keep going, and it's buy the dip, and we work our way back up here. Again, there's all-time high, 45.50 ES. So again, if it rolls over, and that's the only trade I've got on right now. If we roll over and just go down this way, yeah, we'll reevaluate it as we go down. Let's go back out here and look at a longer term time frame, and this probably gives you a little bit better idea. We've been talking about this. We came right down into this retracement here, and we kind of sat there. You see the big green candle there, big red candle there, big green candle there. This is kind of what we've been doing. Red, green, we just kind of took a little bit longer to get our foothold. So again, this, hopefully this holds and we kind of start working our way back up here. And we may not go in a straight line, but we may, come up here, come back down, come up here, come back down, come up here. It may take a little while to do that. I don't know. Very, very, very much in limbo right now as far as which way we go. Or we just turn around and fail and we come all the way back down into the fire line. That's kind of where one of the major levels that I would say that if we fail and come down, and also we're coming into October. What happens in October? The market can sell off historically, bad month, all that kind of stuff. It's actually this week. The week after the third Friday in September is historically a really weak WEAK week, week, and so far that's the case. So again, we don't know if we'll get followed through to the downside or just continue to buy the dip. Now we'll say this: the moving averages have turned up. So if you're looking at smaller time frame charts, it is technically it's bullish. So. And again, that's how I'm positioned to have this thing go higher. If it comes back down, if it goes higher, I will set up and try to fade it for the next move back down. Because I think even if we do go higher, I don't think there's probably too much gas left in the tank to go extremely higher than the all-time high here. So we'll see. If it does start to come down, maybe we can catch a couple of good shorts or something like that. We'll play it as it goes. We'll try to do some hedging on the upside and kind of try to ride the downside if we get downside. So the beauty of trading like this or looking at both sides of the market is I don't really care which way it goes. I can make money up or down. It doesn't really matter. It can even be much easier to make money on the downside because of volatility pop that you get. But again, we are in some pretty big uncharted waters here with a lot of things going on in the background. We got the Chinese developments. We got the Chinese government. We've got COVID. We've got the Fed. We've got October. Guess what? We've got earnings season coming up. There's a lot of variables out there. So again, stay light, stay nimble, and just kind of trade this. I'm trying to scalp and trade this thing on small time frame. I did a little scalp today on the S&P at 4,400, and it worked out fine. But I'm not committing large sums of capital to any one direction here, I guess is the best way to put it. And I'm still looking for honey badger type stocks, and I really don't have, my list is not very long right now on those either. So I'm actually being pretty happy kind of sitting on my hands and watching and waiting for better opportunities, and that's what I would advise to do as well. Just be nimble, be careful on your sizing, and keep some cash, because I was going to say from day to day is going to be different, but even hour to hour in this market is different. I mean, we saw that this week where you get short in the morning, and then you get your head ripped off on the upside, and then you get long, and then you get it's just back and forth. Tough market to trade. So that is what I've got. I'm light and happy, flat and happy, and or basically flat and happy. And we'll continue to watch it and see what happens. So thanks for the time. I appreciate it, and I'll talk to you soon. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me